Hope you guys are having a good weekend and spending some nice time away from the charts. So this video is about the introduction to one of our best strategies, the A&A Pinnacle Strategy. So before we dive into the video, I just want to go through our website, and if you are interested in what you're seeing on our YouTube channel, feel free to sign up to any of the services that we are currently offering. And don't worry, there's going to be a lot more services that are added very, very soon. So if you want to read more information about anything, just click read more, and then it will bring you to our page. And if you want to sign up for any of our courses, for example, our Forex course, we're releasing our one-to-one mentorship very, very soon. So by all means, sign up and click purchase if you would like to follow a lot of traders. And then if you want to get started, just click the get started button. And if you want to contact us, there's a nice form you can fill out. Follow our Instagram, definitely. There's going to be a lot of psychological and technical analysis information that we're going to be posting there. And yeah, feel free to drop a review as well on our review section. Yeah, so average star rating is 4.7, bang on. So yeah, let's dive into the video then. So as I just mentioned, this video is about our A&A Pinnacle Strategy, right? So what is our A&A Pinnacle Strategy? So currently we have 3 strategies, and we're in the backtesting stage of our 4th strategy. So currently we have the A&A Pinnacle Strategy, the A&A Summit Strategy, and the A&A Apex Strategy. This A&A Pinnacle Strategy that we're discussing right now in this video, the introduction to it, was actually our first strategy. So it's like a very lengthy strategy that we've gone through and backtested multiple times. So we're quite confident in this strategy. So essentially what this strategy is about is that it deals with both institutional trading and a concept that the market moves in waves. So what we can see here is we've marked out how the market moves essentially. So we know that the market moves in waves, right? As I just mentioned. Within those waves are subwaves. Within those subwaves are further subwaves, and within those further subwaves are further subwaves. So what does that mean? That tells us that price is fractal. So what do we mean by fractal? Fractal basically means that price can move in the same way in different time frames. So if I go to the 4-hour time frame right now, I can what can I see? I can see this first wave, right? First wave, second wave. Then I can see this third wave, and I can see this fourth wave, and I can see this fifth wave. That's a very large scale wave. Now if I dive down to the 1 hour, what can I see? I can see subwaves within these waves. So that's what we mean by fractal. So I can see here within this third wave that we were on about, this big third wave. So we had wave 1, wave 2, now we had wave 3 over here. I can see subwaves within this as well. So I can see wave 1, wave 2, wave 3, wave 4, wave 5. So I can accurately predict where the market is going to go based on my wave structure. Now, this is the principal basis behind our A&A Pinnacle Strategy. So we don't just use this. We don't just use waves. We also use institutional trading as well as this wave pattern that we can see in the A&A Pinnacle Strategy. However, when we talk about institutional trading, that will be in our next introduction video. So make sure you're tuned in for that one. So essentially, there's not just any random waves. We have a bunch of different types of waves. So let's go in a bit more detail. Okay. All right. So we know that the market consists of waves. So we have wave 1, wave 2, wave 3, wave 4, and wave 5. Right. So essentially that is the very basic wave pattern. So what is this? Well, we have this Elliott wave. So we use this Elliott wave button on the tools and trading view. So we mark this off as wave 1, wave 2, wave 3, wave 4, and finally wave 5. that is a very basic overview of what the wave pattern that we use for the A&A Pinnacle strategy is. So this is termed as a motive wave. What do we mean by a motive wave? We mean that this wave moves in the direction of the trending market. So we consider it either an impulse wave or a motive wave. It's the same thing. So it's a 5-wave structure. This is a motive wave. We also have correction waves that we'll eventually get to. But let's just finish off this motive wave first. So this is, you'll never see markets, you'll never see technical analysis like this. You won't see price acting or behaving like this. You'll see price behaving like this. It's going to be like this. And then you'll see a deep correction, which we'll get into eventually. And then you'll see a large impulse. And then finally, we're going to correct this off and then finish this off. Okay, right, I'm going to go over that again. Didn't come out well. So it's going to be like, this is going to be our first wave. Let's say that's our first wave. Okay, now we're going to go into our deep correction, which wave 2 tends to typically go into. And then we're going to see a burst. That's going to be our wave 3. Now don't worry, don't get overwhelmed. We're going to go over this in a good bit of detail. That's going to be our triangle wave that we'll get to, and then finally we finish off with wave 5. Okay, so what is all this? You're never going to see market behave like this. You're not just going to see wave 1, wave 2, wave 3, wave 4, wave 5. It's never going to be like that. It's going to be like this. It's going to be more confusing. You're never going to see very basic price points. Okay? So, what are we going to mark this off? Well, this will come with experience. But right now what we can see is we can mark this off as a small wave 1, wave 2, wave 3, wave 4, wave 5. And that makes up, remember we said price is fractal? So you'll see this on the lower time frame. And then this will make up a larger wave. So that's going to be wave 1, large, wave 2, large. And then we know that wave 3 always consists of 5 subwaves because it's the largest or the second largest. It's never the smallest. It's the largest or the second largest wave in the motive wave. So we know that that's going to consist of a 5-wave structure. So that's 5 waves done. And then wave 4 will be your contracting triangle. And then finally you finish off your motive wave. So let's make this a little bit on the higher scale. So let's change this to yellow. Okay, so now this may seem a little bit more complicated, but just stick with me here. So we've done these waves, right? So we've done wave 1, wave 2, wave 3, wave 4, wave 5. So let's just mark this off as well. Right, so let's put this green. Okay, so right, now what are we doing? We're marking out all these waves. Okay, so essentially where would our entry or price point have been if our preferable price point to take this long entry? Well, it would have been, this is how we trade this A&A Pinnacle strategy. We trade this on wave 3. We know that we're going to get a very big expansion after this contraction of wave 2. So we would like to enter on the end of wave 2 with a long position. This is where we'd enter. We'd have our stops. A lot of traders that don't know institutional, you would put it below structure or you would put it here. However, with our institutional perspective, we're able to get our stops to at least 1 pip, even smaller than 1 pip. And then obviously if you want more detailed analysis, you can head over to our website or join our public channel in the bio. So, and then we look to be targeting long. So that gives you quite a nice risk to reward, around 120 risk to reward. Yeah, so that's how we use this Elliott wave structure in our A&A Pinnacle strategy. Now, we only trade it after wave 2. We don't trade it. Oh, if we see wave 1 done, no, we don't get in. That's not how we trade. So our price point will be wave 2 completes. How will we know this? How will we know that wave 2 is completed? Well, this is what we're going to move on to now. So we've done the impulse waves. Now we're on to correction waves. So actually, before we leave that, these impulse waves, as you can tell, wave 1 is going to be the impulse wave. Wave 3 is also going to be the impulse wave, and wave 5 is also going to be the impulse wave. That means that wave 2 and wave 4 are going to be correction waves. Okay, so we're going to move on to correction waves now. Now, bear in mind, this is all very basic. It's just to help you get an understanding about what our A&A Pinnacle strategy is. Obviously, if you want more detailed analysis and if you want to be able to do this on your own charts and get the degree of accuracy that we do, you can sign up for our mentorship or just even purchase our Forex course through our website. Or even if you just want to see what our charts are like, you can just head over to our public channel. Link will be in the bio. And then you can have a look over there and discuss our charts as well with a lot of skilled traders in our discussion group. So now let's move on to correction waves. So we know that correction waves there's principally 5 types of correction waves. There's going to be the A, B, C, D. So I'll just go over it quite basically with you. So A, B, C, D, E. Perfect. Then it's also going to be wave 1 comes, so the impulse will come in here. Okay. Now we're also going to have a diagonal, A, B, C. We're also going to have let's say WXY. So these are the 3, I'll do the 4th one as well. Okay, give me a sec. I'll just take away this, just bear with me here. And then finally we're also going to have, this is termed a zigzag. Now bear in mind, you're not just going to be able to get this straight away with the degree of accuracy that I'm able to. This is like required years, months, years of back testing, of articles, of perfecting this A&A Pinnacle strategy. And yeah, it's not easy, so it does require a good bit of effort. But obviously if you're willing to put in the effort, then the reward is quite high as well. Yeah. I'll just move this higher up here. I'll just bring this across. So we have this triangle. Okay, I'll just actually fix this. A, B, C. And then finally, right, so let's get started and let's dive into the correction waves. So this is termed as the contracting triangle wave. So I'll just make this in a different color writing for you guys. This is a contracting triangle. This is termed as a flat correction wave. This is what we term it in our A&A Pinnacle strategy. And then this is a WXY, or a double combo wave. Now bear in mind, this is actually very basic, detailed, and with how you can predict it to the accuracy of 1 pip is all going to be explained in our course. And then this is also a zigzag wave. Okay, so what do we mean by all this? So once again, this is all waves. Market moves in waves. So this can be termed as a contracting triangle. How do I know that? Well, look at it. How we're approaching this with lower highs and higher lows, right? So I'll just bring this a bit higher up. This is what we call as a contracting triangle. And how do we use this? Well, we've seen this impulse up. Okay, so that's going to be typically our fourth wave complete, and then we have this A, B, C, D, E wave complete. Once we break, that's where we take our long for our fifth wave. So this is a very, very, very common, especially in stocks, you can find this pattern. It's called a contracting triangle, and we use it as part of an ABCD correction pattern in our A&A Pinnacle Strategy. Then we also have another correction wave that we commonly see in the market. So this is going to be our flat correction wave. So A, B, C. Once again, price is fractal, right? So this is going to be A, B, C within this A wave, A, B, C within this B wave, and then C will be your final impulse wave, which we just talked about the impulse waves over there, the 5-wave structure. C is going to be the impulse wave, wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so I hope this thing makes sense, this strategy. So if you're having any difficulties understanding, by all means join our public Telegram, and then we'll be able to help you guys there. Or if you're interested in premium daily analysis, then by all means just sign up for it via our website. And if you have any questions, just drop it in the comments as well, and we'll be happy to help. And then this is a double combo wave. What's the difference between this flat correction wave, this zigzag wave, and this double combo wave? This double combo wave is over a larger period of time. Why is it over a larger period of time? Well, because it consists of two correction waves linked together with an X wave. So we have this ABC, then we're going to have another ABC. This can be a triangle wave as well, the contracting triangle. And then finally ABC. So that is what we mean. So I'll just make this a different color because this is a linker. This is what we term as a linker. We have one wave complete, correction wave like this. Let's say this is a flat correction wave. Then we're going to have a linker wave. This is most likely a triangle wave, but it can also be different waves like a flat correction wave again. And then finally we're going to have this ABC wave. This ABC wave, which is the final correction wave, is most commonly a zigzag wave because it's considered your final wave of your correction. And we term this as a WXY, double combo wave. So it's going to be this, and then finally this. So I'll just make this a little bit clearer for you guys. Let's say we turn this blue and we make this submicro. And then I'll bring this a little bit lower. Right. So next thing that we have is, so essentially the double combo wave just links two correction waves. So we have one correction wave. If we do not see an impulse wave again, we see this correction wave, we know that we have not yet completed correction. So we can presume that the fifth wave, i.e. the impulse wave, is going to continue up because we didn't see an impulse, we saw a correction again. So we know that we're due for another correction. That's how we trade this. We bring out our fib, we bring out our order block that we'll talk about, obviously the institutional perspectives in our next video, and then we trade that. And then we trade this short because we know this isn't an impulse wave, we know this is a correction. We saw this is an impulse after a long, so we had this bullish move up, we saw this correction. We know that this, normally what we'd have is we'd have this as an impulse because we'd see our correction complete. However, we see this next wave is actually in fact a correction. So we know that we're due for another correction as part of a WXY wave. Hope this double combo is making sense. And then finally we have a variation of this flat correction wave. So we talked about how this fractal wave A is an ABC wave. However, for a zigzag wave, this fractal A wave is an impulse wave. So it's going to be wave 1, wave 2, wave 3, wave 4, wave 5, ABC just like this, and then finally 1, 2, 3, 4, 5. Now, the only difference between the flat correction wave and the zigzag correction wave is this first A wave. So I'll just mark off this A wave. A, B, and C. So the only difference, this is going to be the exact same. Wave C is going always has to be an impulse wave. So it always has to consist of 5 waves. Wave B always consists of 3 waves. Wave A, can either consist of 3 waves in a flat correction, and a zigzag will consist of a 5-wave correction. So this will be wave 1, wave 2, wave 3, wave 4, and finally wave 5. So I'll just make this little sub-micro as well, and then I'll change this to another color. So let's make this red. Okay. So far that is the correction waves that we've talked about. The other final correction wave is WXY XZ, so a triple combo wave, where we just have another linker, for example here. After this, if you see an impulse wave, then you know you finished your correction and you should continue up as an impulse. Now, if we don't see that, let's say we see a triangle forming. Let's say we see a triangle. A contracting triangle. We know that is wave A, wave B, wave C, wave D, wave E. So now we know that we haven't completed, we're not in our impulse wave yet. So we know we're due for another correction further down, and then we're going to move up to finish our wave. So in this case, what would this be? This would be, let me just mark this off. So this will be our contracting triangle. And then, now bear in mind, we don't actually trade trend lines. You'll be able to get all this from an institutional perspective. So now instead of a WXY, we're going to change this to WXY XZ. So this is going to be our wave W, wave X, wave Y, wave X, and wave Z. And then finally there's no further correction wave after wave Z. Again, wave Z is either going to be a flat correction wave or a zigzag wave. So as you can see, we can predict everything quite accurately with using our wave structure. Now, this is very hard. I understand that. And it requires a lot of effort and back testing, fitting this to your strategy. But trust me, the reward, you'll be reaping the reward. I mean, with the highest risk to reward that we've got with our A&A Pinnacle strategy is in fact 170 risk to reward after a scale-in, where we had a 100 risk to reward, and then we scaled in with a 70 risk to reward. So you can see if we risked €100, that's 17k right there on one trade. So this, trust me, this is really, really like groundbreaking, you could say. So that's why we call it our A&A Pinnacle strategy. And yeah, so let's just quickly dive into a chart and let's get to it. So yeah, before we do that, if we have this extension of this correction wave, then that would be termed a triple combo if extension. I hope you guys are making notes on this and taking it down into whether you use this as a note taking or whether you're just watching this for the fun of it. I would recommend taking notes. It's going to help you in the long run. So this is our correction. This is our impulse, where we have subwaves within our impulse. Now, rules for all of these correction waves, how to get these accuracies, we'll discuss later on in our videos as well. But we won't discuss it in the depth that we have our mentorship, just to be fair to the guys who have purchased these mentorships and these courses from us. So, as you can see, what do we see here? Live example, right? Market is in waves. Right? You can see all that. Market is definitely, you can see it predicting with such good accuracy how the market moves in waves. So, yeah, recently on NZD/USD, we finished off wave 5. Now, what are we in? How can I tell this is a correction? Well, we finished off our 5-wave structure. So we're in a correction wave. So I'll be marking this off as wave 1, wave 2. I won't be marking this off as any wave, because it's broken one of our rules. So there's a subwave here, wave 1, wave 2, wave 3, wave 4, wave 5 as part of our third wave, wave 4, perfectly valid final wave 5. Now, that can be termed as an ABC as well. If you look over here, 1, 2, 3, 4, 5, and we see a correction. And then we see another impulse again. So this is going to be wave 1, wave 2. We're most likely going to see sort of impulse up. And then we're going to finish off our correction wave here. And then we're going to break down for wave C. So how am I able to predict all this? Now, let me just clean this up a little bit more, just so you guys can see it a little bit better, what I'm seeing. So we see wave A. We're always going to term it as wave A. This can't be a triangle wave, because a triangle wave does not come after we've completed wave 5. So we have wave A. We have a 5-wave structure here. So we know, what did we say? We said wave B is a 3-wave structure. So that's definitely not going to be wave B. Wave B is going to be after we finish this, and then we're going to have wave C down here. So what is this looking like? This is looking like a zigzag, right? Now, this zigzag pattern, because we know that wave B isn't wave B because it's a 5-wave structure. So we're going to say this wave B consists of an A, which is always a 5-wave structure, or a 3-wave structure, wave B, and wave C. So we're going to complete our wave C. Now, don't worry, I'm going to clean this all up for you guys. Let me make this minute, and then I'll make this a purple. Right, so what am I expecting? Well, we saw this impulse up, so that's confirmed our wave 1. I'm going to expect a mini wave structure, again for wave 3. Then I'm going to expect a wave 4. Finally, wave 5. That will complete. What will that complete? That will complete our A, B, C as part of our larger B wave. And then we can expect a break. Now, we have liquidity resting over here. Don't worry, we'll talk about liquidity in future videos. We have liquidity resting here, so I'm expecting a break above. And then what am I expecting? We know whenever we run above previous highs, we always expect a very large C wave. So we're going to mitigate, and then we're going to continue down as a 5-wave structure. Wave C is always going to be a 5-wave structure. So this is what I am predicting. So how did I get all this? So we saw wave 1, wave 2, wave 3, wave 4, wave 5. Remember, price is fractal. So if I move down to the 1-hour time frame, what did I say? I said, why am I not counting this? Because it was invalidated. One of our rules was broken. So as a result, I can go down to my lower time frames and I can see I was right. Because now we have another wave over here. And bang. See what I mean by this? Accuracy is just unbelievable. Like, sometimes I even get astonished as to how accurate this is. And I actually came up with this. So, yeah. And then we can see our correction. So I'll just make this a different color. Let's make this orange. And now let's go back to the 4 hour. That's our principal wave time frame. And then we saw that this was a 5-wave structure. So we know this was in our B wave. We also know this was in our B wave because we had liquidity resting here. So I'll just make this buy side liquidity. And then we had wave A, wave B, wave C as part of our larger C wave. And then, one second, let me just make this a little bit larger. Okay, so this video has gone a little bit over time. But yeah, don't worry, it's all educational, so it's perfectly fine. And then we're going to grab the liquidity. We're going to mitigate our liquidity. And this is where we're going to enter our trade. With our 2-step confirmation, especially on NZD pairs, we're able to get a quite tight stop loss. Maximum stop loss that we're going to have is around 8 pips. Always 8 pips max. So obviously we're going to drill it down to the 1 minute time frame, and we're going to be able to get quite an accurate let's even say 6 pips. 6 pips is actually quite large for us, but let's just say it is 6 pips. What are we going to target? We're going to target liquidity. Don't worry, we'll talk all about this, and we're going to be able to target this. If we break above this liquidity grab over here, that's going to give us even more confluence, because we know that whenever we break away above from our previous impulse wave's origin, so we had this origin of our correction wave here. If we break above it, we know that there's a greater chance of a larger C wave that's going to break below A wave. We'll go over all this, especially in our mentorship, and you'll be able to see this on our charts as well. So yeah, hope you guys have benefited from this video. Hope you guys have taken notes, and I wish you guys the best of luck in your trading. Now, make sure to join our public Telegram channel, or even if you want daily analysis with entries, take profits, stop losses, all mentioned, with very high risk to rewards, you can sign up for our premium channel on our website that I talked about. But yeah, wish you guys the best of luck, safe trading, and make sure to remember that, always remember that you should only trade the amount that you're willing to lose. Okay, so wish you guys the best of luck in your trading, and good luck from me.